It's a bear. Lucky coin. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got the different cam up today. This is the live cam on Fort Lauderdale Beach, commonly known as some of you boomers as the Fort Lauderdale Strip. Remember where the boys are, that old movie? Again, I guess I'm dating myself a little bit. I'm not that old, but I'm still dating myself. But beautiful day out there. Looks like actually a little longboardable wave right there, which I'm not seeing in my city, which is a little north, but might be just a really shallow sandbar as well. Lovely day out there, and as you can see, there's a sport fisher out there, I think. Maybe not, that's pretty big. And a couple cruise ships. Actually, the port of Miami, where almost all the cruise ships come out of, there's probably a cruise ship right there waiting to come into the port. And they kind of stack them up out there, and usually you used to see lines of cruise ships out there. But right now it looks like there's one out there, a couple guys out there fishing, I think. I'm not sure if that's, maybe it's not a fishing vessel. I can see a few boats out there doing their thing. Well, anyway, beautiful day. Let's talk about, and I hope it's a beautiful weekend and a beautiful day for you folks as well. In Florida, it's a little bit gloomy. We're going to get our big cold front moving in tomorrow. Apparently, supposed to. I heard temperature reports here in Florida as low as 38. Boy, that'll kill all the iguanas, won't it? And the only people who will be outside will be Canadians, and I'll suspect a few of them will probably be at the beach swimming too. So tomorrow, 38 though, going to be an unusually cool day for Florida. We've had kind of a nice season this year though. Traffic, look at that too. This is our full-on season, and look, this usually backed up for most times, but a little quiet out there today. Let's take a look at markets, and what is my quote of the day? A master manipulator makes a lie believable by mixing a small fraction of the truth with a large fraction of lies. And why do they do that? Because they defend the small fraction of truth. What, you don't believe that? That would be an example of that. But master manipulators make lies believable by mixing a little bit of truth in with mostly lies, and we see that all the time. What has that got to do with today's gold and silver markets? Well, that's kind of what they did for years with the manipulation of gold and silver. Gada talks about the manipulation of gold. Ted Butler talks about the manipulation of silver. They both have very credible, valid points, not to mention that a lot of these big commercial banks have been charged and fines for manipulating the gold and silver market. So we used to be in the conspiracy level where the manipulators would say, oh, that's not true. That's not, you know what I'm saying? So, but the problem is we've got a mainstream corporate press out there that a majority of the people listen to, that they either lie or they're ignorant on certain things, and that's kind of what we got going on in gold and silver markets. We've got a lot of manipulation out there, and man, sometimes I'd rather not talk about this manipulation. It kind of gets, I won't say it gets old. However, the reason I continue to talk about it is because the message needs to be heard. The message needs to get out there. People need to know this stuff, and if you stop talking about it, that's exactly what they want you to do. They want you to stop talking about it. They want you to get frustrated with that. They want you to go away, all right? They don't want you talking about the manipulation of precious metal markets like gold and silver, and there's probably even a bigger reason why they don't want you talking about it, because there's a lot of other markets that are manipulated, particularly in the COMEX markets. They don't even want you to get there. Gold and silver is such, especially silver, is such a small part of the COMEX trading, and if we know for sure that we've got manipulation in COMEX silver, it got to make you wonder. It has to make you wonder if there's manipulation going in the markets that are 1,000 times larger than the silver markets. I would bet probably yes. Okay, no less. I mean, think about it. It's absolutely true. Look what JP got in trouble for back in the mortgage crisis. Remember, they were telling their clients to buy these mortgage-backed securities while they were shorting them on the other side. I mean, that's just plain freaking evil, folks. Manipulative, you call it what you want, but that's what we got here, is that we've got a dishonest system out there, especially when it comes, in my opinion, and to a lot of opinions of people smarter than me like Ted Butler and GATA.org, like the CRIMEX markets, the COMEX markets, I believe, are very crooked. They cater, in our silver market, they cater to these large short positions who again never take the long position, from what I'm told, or very seldom if they ever did. And their only goal there is just to monkey hammer these markets down for their own benefit. Now, is that capitalism? Kind of, yes, but is it free market? Not really. It's not capital. What am I saying? It's crony capitalism, because these big commercial banks are in bed with the casino. And I have oftentimes compared it to the, so think about this. Think if you had your favorite casino you went to, and we're gonna kind of call comics a casino. You got your favorite casino in Las Vegas you go to. You've been going there for years. All of a sudden, you notice that this casino is catering to the big players at the table. You know, the guys that have the money, that are making $1 million bets while you're out there making $100 bets. Okay, all of a sudden you see the casino start to make money off those bettors, and they start to cater to them and give them special privileges. That's kind of what we got going on there. Comex being the casino, giving the big whales, those big commercial whales, special privileges. But in this case, the whales aren't stealing from the casino. They're stealing from the other players, all right? And the casino's turning a blind eye to that. Comex is turning a blind eye to the big commercials stealing from the other players in that market, all right? And that's giving it special favors. And why does Comex do that? In my opinion, Comex does that because they make a fortune catering. That's because these large manipulative commercial bank players are making a fortune, and nobody says anything in the government regulators, which are worthless or complicit, in my opinion. None of the legislators know about this stuff, and there's probably only a handful of legislators we have that would even understand it. Most of them are morons, and in fact would probably agree with these people and just double down on their stupid, but that's my opinion as well. So why do I talk about this? Because the word needs to get out, and we've got to continually be reminded that we know how the game is rigged, but if you don't play, you can't win. But a lot of people don't know how the game is rigged, and I'm really surprised at how many money managers out there, maybe they're algorithms, that trade gold and silver that are completely clueless that they're being played themselves, all right? Well, let's take a look here, and who's playing them? The big commercial banks, people like JP. They've been playing people for years. Then you got some other commercial banks in there doing the same thing, shorting these markets, following JP's footsteps. Of course, no one will be ever as great as ever as the largest, biggest crooks in the banking industry, J.P. Morgan, in my opinion, but no less. That's my opinion, okay? I'm sticking with it, too. So let's take a look at prices today. And the reason I'm talking about this and a little more passionate is because the best time for me to really bring this up and kind of blow it up a little bit is when you watch these markets literally get monkey hammered for no reason. I mean, other than, like I said, the sheer manipulation of it and the sheer greediness of Comex to allow it to happen, and the sheer stupidity of the CFTC and other regulating agencies for being complicit or ignorant, maybe both. All right, let's take a look at the overnight market. 1781.31 was the low last night. The high, 1800 was probably the high last night. I'm going to look at the 24-hour charts and let you know where this hammering took place. And silver, even more so. I believe that gold is kind of being knocked down. I mean, think about this for a second. If Bank of America, which seems to be correct, Ted Butler, I believe, is absolutely correct on this, from his assessment from the data that he's got. And again, that is not a guess on his part. He's actually got data that is showing that Bank of America has this large derivative position of 800 million ounces or so in silver that they've averaged around $23 an ounce for. So if you don't think that this right here is not being manipulated downward for the sake of Bank of America and possibly, and the other short positions, the big commercial shorts that constantly manipulate this market, then you're in a fantasy world. And we're going to talk about that in a moment, about being in a fantasy world, manipulation and stuff like that. I want to talk about data manipulation as well, and how data manipulation may play into manipulating charts, because a lot of people use charts to figure out what they want to do. But what if the data is manipulated purposely to skew the charts in the favor of the manipulator? That's something I'd like to kind of get into. We don't talk about this much. And if chart guy, if you're listening out there, let me know what you think. And again, I'm not knocking charts, but I'm just wondering how people that read charts understand that maybe possibly the charts are manipulated by the manipulated data that they're using, and maybe the charts aren't reading a true picture of what the market really is, but what the manipulators want it to look like. Did that make sense? All right, just take a look at silver here, low at 22.34, high at 22.83. We've hit that below that $23 mark, and like I said, isn't that a bit suspicious that BofA has this big short position of physical derivative that they have to fill, and silver is just having the hardest time staying above that 23 mark? It's not suspicious, folks. You know it as well as I do. And you know who the players are behind it. And we know how the game is going to end up ultimately, which is a big win for us because, like I said, if you know how the game is rigged, you know, of course you should play because you'll probably win. Let's take a look at platinum right there. Did a sub $1,000 mark for a little bit, didn't stay there long. And a high of 1,032 and currently sitting at 1,004. So we know what the numbers are. Again, in my opinion, just buy the dips. Just buy the dips on this stuff. We've been in a bull market since 2016. Now, bull markets in gold and silver do not look like bull markets in cryptos. In fact, very few bull markets in anything look like a crypto. However, gold and silver bull markets do move at a snail's pace. I got to admit that, until they don't, obviously, but typically they move in a snail's pace, and it takes them. And that's because they really are just following this. Hang on a second. What are they following, which also moves at a snail's pace? Hang on. I will show you right there. This is what gold and silver is following, which also, look, this is 1950, 60, 70, 80, 90. And we get our bumps. Look, 80, we'll get a bump in gold like that. But the gold and silver is following the fiat. It's following the decline of fiat right here. And as you see, it moves very slowly. And on this timeline right here, gold's doing this. You know what I mean? Slowly going up as that one's going down. But that's the cause of it right there if you really think about it. Let's look at the 24-hour charts now and see what we have going on here. I'm going to take a sip of coffee as well. All right, I lied. I took 2 sips. Sorry, didn't mean to lie to you. Well, let's take a look at the Kitco 24-hour charts. I just refreshed these, and of course, you know, it is, of my opinion, again, where we're seeing this monkey hammering happening. Boy, it's a big monkey hammer day, isn't it? If you're drinking, every time I say monkey hammer, you are smashed by now. So that's exactly what we got going on here. There's the New York Globex markets, again, owned by COMEX. Both COMEX runs New York Globex and COMEX runs NYMEX. I believe that right now, for a while there, as I said over and over this last week, we've seen the action in precious metals. Mostly when New York NYMEX opened, you'd see some huge down action, some up action, but most of the activity was happening there. But I think, and that's where all the monkey hammering was started, and then afternoon it would flatten out. See how that flattens out right there? See how that kind of flattened out right there? The activity for a while was only starting right here and would stay flat in the evening markets, but right now I've been seeing this downtrend in the evening markets as well. As I've said over and over, I can't tell what trade caused this. Was this trade made in London or was this trade made in the Globex markets? I suspect it's made in Globex markets, and it was done in the evening in very thinly traded markets with no other intent except to knock that market back down. And again, you can see some choppy action here afterwards. Again, that's my opinion, speculation on my part that these trades that knock this stuff down are done in Globex, not in London. However, I have no data to back that up. Please, if anyone can correct me on this or teach me a little bit about this, I'm open, I'm all ears. How do I tell where these big trades are made? Was it in London? Because they're both open at the same time. The problem with Globex, it's a 24-hour market, so every time I see a big monkey hammer of gold and silver, I'm always suspicious it was done in the Globex markets. And is that suspicion, am I right having that suspicion? Let me know what you think in comments. Well, let's take a look at the 24-hour spot silver bid here. And same thing, but silver kind of drifted sideways last night, yesterday. We're suffering like the tiny little, it'll go down 50 cents, it'll go back up 35 cents, 40 cents. So we've been suffering these little 10 cent and 20 cent declines here after all this crazy activity. And again, look at this, that line kind of pattern goes straight. And prior to a couple weeks ago, that line would have been pretty much straight the same way. Oh, kind of like that almost, but it did drift down, but kind of sideways. And then again, the monkeying hammering used to start at 820, but it seems to be starting earlier. But silver kind of flattening out there. So let's see what happens. Like I said, isn't it kind of suspicious that it's the $23 mark, the supposed mark that BofA has break-even point for them on that big silver derivative? Conspiracy? Maybe, maybe not. Let's take a look at markets. Dollar index here. I wanted to kind of look at the dollar index here because I kind of looked at it a lot before in the past. Now I'm not paying attention to it as much in our videos here. Over the course of the year, though, especially the latter part of 21, I mean, just look at the dollar strength from June. I think that's to be expected, though, because we were coming off. And let's do a longer chart. Let's just see what the, let's look at the whole chart here. Oh, that goes back a little further than I want to, but there we go. This is after the economic collapse, if you think about it. There's 2008. So the dollar pretty much was trashed from here to 2008, but dollar strength, oddly enough, increased with money supply. Explain that to me. Again, if someone smarter than I can explain that to me, please do so in comments. How does the dollar strength increase as the M1 and M2 increase substantially, and the dollar gets stronger? Maybe it just got so hammered here. This is like, is this a dead cat bounce, which I talked about the other day? Right there, that little area I'm going, is that just a dead cat bounce from a zombie economy from 2008? Perhaps, but boy, that's kind of weird. Like I said, you would think that the dollar wouldn't be so strong with the money supply being as large as it has. Well, again, I'm not an expert on that stuff, folks. I'm learning as you, and I'm just kind of talking out loud with you because maybe you're thinking the same thing I am. And again, anyone got some thoughts, put it in comments below. So what is my expertise, by the way? My expertise is physical markets. I am an expert in buying and selling physical gold, silver bars, platinum, gold, silver bars, coins. That's my expertise, and I've been doing that for a long time. I know where to get the product cheap. I know all the traders out there. I've been doing this since I was a kid. So I have good sources for all types of precious metals. And I beat the big online guys. I know this is my shameless plug. Bear with me for a second. I do advertise to beat APMEX, SD&J, and Bullion on their reasonably priced bullion products, not on their overpriced shiny stuff. Again, on their reasonable priced products, I can beat them, but you have to live in South Florida to deal with me. We're only a face-to-face brick and mortar. Maybe one day I'll do some online stuff. I got a few people encouraging me to do it, but I'm so busy with what I'm doing right now. And I've been doing this since 1977. I started working for my father. He was a precious metal and rare coin dealer as well. And I have started my own place here in Lauderdale by the Sea in '95. Well, there's my whole bio. I did in a couple minutes. I just saved you from listening to it later. But dollar strength, I mean, this just does not make sense. You know, if you figure that the money supply has increased dramatically, but the dollar seems to be getting a little bit stronger, that's odd to me. Well, I'd sure like to see this chart here for longer. Why is this? I got it on all. I mean, is this as far back as these people charted this stuff? And again, we're going to talk about charts. We're going to talk about data in a little bit. We're going to talk about how data can be skewed and how that can skew charts, and how that might screw up a chartist. Again, my opinion. I'd sure like to ask my chart guy a couple questions if he's out there. Let's take a look at the Dow Jones, SP, NASDAQ. Last night and this morning, I was looking at minus 300 points, minus 385. Now we're looking at up 123.41, just barely up. Folks, I got a sneaking suspicion that the PPT, and we talked about this earlier in this week, and again, more manipulation, okay? I have a feeling that the Fed or the government, maybe the plunge protection team, is intervening in the stock market right now. I believe they are trying to slowly let the air out of the balloon rather than let it just fall at once. They're using your money to do it, of course, our money, I should say. But they don't consider it our money; they consider it their money. So, but I believe that the reason that we're seeing these kind of sideways movements, the overnight markets seem to be hemorrhaging, but you see these sideways movements right here. They're allowing it to happen in the evening. They're allowing these markets to fall in the evening, and then in the mornings, it looks like they're kind of going in and bailing them out a little bit. This is pure conspiracy on my part. However, I have no doubt in my mind that the way the Fed turned into intervening in markets and government started directly intervening in markets, and I think Sprott talks about this in an article we're going to look at. We are not in a free marketplace. We are in a very manipulated marketplace, and now we've got major manipulation by the people that actually print the money. That's just freaking crazy. So Free market, no. Cronyism and manipulation, yes. But it will end as we get the message out there. This is why it's important for us to keep talking about this stuff. Again, my opinion. And you probably wonder why I say my opinion so much, because that's exactly what it is, and I don't want anyone to feel otherwise. So we all have our opinions, and a lot of us share the same, so that's what we're doing here. And let's take a look at crypto markets. Really, I'm really surprised at this. Let me look at the 5-day. Actually, let's just look at the 1 month on the Dow Jones. So yeah, they're off quite a bit from the highs. And again, this looks to me like, that looks like the bubble was about to burst. And again, I really believe that there was intervention by the Fed or the PPT, which caused this up right here, it to kind of jack back up. But if you look at it here, this is a deflating asset. This is the deflating bubble, especially if it continues to move downwards. Maybe the Fed and the president, the plunge protection team learned from 2008 to slowly let the balloon, the air escape again, rather than to pop it all at once. But the problem is the only way they can do that is to directly intervene and manipulate these markets. And that's even worse, I think. It causes bigger problems. It may look good in the short term, may be good for the current administration, but not good for the economy, not good for us. It looks like cryptos are kind of moving sideways. The granddaddy of cryptos looks like it's moved up a little bit. If you take a look at the 1 month chart, doesn't look so bad from where it was right there. However, that's kind of an interesting, again, I don't consider cryptos a asset. I consider them a volatile game. To me, they're not really assets, but of course, being a capitalist and free market person, I love games as well. I think if you can make it listen, if you're experienced and you can make good money sitting at a blackjack table or a poker table and consistently pull money and be a full-time gambler, man, you got my you got my respect. And I think the same thing in the crypto markets. If you can sit at that table and make money and consistently make money, I'm not talking about just by sitting and holding, but making money on this stuff. You're my hero as well. Again, I am a believer in capitalism and free markets, not crony capitalism. And I don't believe that, well, Bitcoin is being manipulated highly as well, I think now too. I think that's what we're seeing here is a manipulation of Bitcoin. Banks purge the weak hands again. This is by Sprott Money. And what's interesting about this is that Sprott, I don't know how many times, who's the guy that writes this? I think it's Sprott News. David Brady kind of wrote this, but I don't think Sprott talks about the direct manipulation, and I kind of like to see them get more on board with Ted Butler when it comes to silver, GATA when it comes to gold. A lot of these industry people, especially Sprott, they got a lot of power to throw around, man. They got the money to do this. I'd love to see all these guys get together in one union and a group, along with other maybe YouTube talking heads and other people, and just start calling the CFTC, start calling COMEX, start calling the legislators. I mean, we need to build some kind of cohesive, united group that does this. In unison all together, there's a lot more power by people doing this. So it's nice to see Sprott talking more about manipulation here. And let's see, where is, give me 1 second here. Basically, the article here, and you can read it yourself under ZH, is banks purge the weak hands again. All right, I'll read it here. I'll get straight to the point. This is little to justify the dump in precious metals and miners in this environment. The Fed is at risk of a major policy reversal due to the persistent dump in stocks. What happens every time they turn on the monetary spigots? Metals and miners have been rallying despite real yields. Now that real yields appear to have peaked and are falling again, gold and the rest fall, that makes little sense. And I'm glad that they spot that as well. It doesn't make any sense, folks. Let me blow this up, make it easier for myself to read. And where would he go here? Right. The same goes for the dollar. The dollar bottom on dollar index bottom on January 13th is now at new higher highs above 97 as forecast. But metals and miners rose with dollar over the same period until Tuesday. What changed? Nothing. I think this is Sprott's acknowledgement that these markets are being heavily manipulated. All right. Was sentiment in the gold sector extremely bullish, hence the ease with which prices have fallen? That's a hard no. So called gold bugs have been beaten down for 18 months. There's no sign of euphoria of any kind. Can I just kind of make a small correction here? Is gold bugs that don't understand that the game is rigged and how it's rigged have been beaten down. But the gold bugs and silver bugs out there that understand that this market's rigged and take opportunities when they throw it downwards to put more physical in their pockets is a positive. That's a good thing, and they're certainly not beaten down. Buying silver and gold a little bit cheaper before this whole thing explodes is not being beaten down, and that's what they provided us with last year. Again, that's my opinion. There's no sign of euphoria of any kind. Are the hedge funds super long the metal? Again, a hard no. Was the sector extreme overbought? Silver did hit an RSI of 70 last Thursday when it peaked, which would justify at least short-term pullbacks. I cited that a week ago. And again, he's talking about RSIs, he's talking about graphs, he's talking about data. And folks, I'm going to make the case today that the data is skewed. That's why it's confusing. These guys, like Sprott and a lot of other chartists out there, love to read the data. And the data really doesn't lie. Well, hold on. The charts don't lie if the data is correct, but if the data is skewed, if the data is manipulated, then the charts aren't going to give a real picture of what's happening. And I think that's why you've got this cognitive dissonance out there in the gold markets versus the data, and also in the stock markets too, because I think that the manipulation we see in the silver market is probably small compared to the rest of the markets. Let me continue here. I also said this last week, what caused the dump in gold miners? That's anyone's guess, but the FOMC coming next week and the Fed likely be dovish to avoid an all-out crash in stocks. I suspect the banks are trying to squeeze out the last few weak hands ahead of a monster rally. And this kind of makes a little sense, and he's suspecting the same thing I am. Think about that. BofA, 800 million ounces short in real physical and a derivative that they have to pay back the physical because they can't roll this over that I'm aware of, all right? So they have to return 800 million ounces. Their average cost is 23. That's, I think, what we're seeing right here, them trying to thrash out the prices to be able to buy back this position, which I think they're going to have a very difficult time doing in silver. All right. According to Mr. Butler, when Bank of America bought this 800,000 ounces of silver from JPM, they sold it back into the market. And guess who they sold it to? Most likely, they sold it back to JPM through some of their customers or another group that they have working for them. So think about how sneaky that was. All right. And they've taken that silver entirely off the market. BofA screwed, in my opinion, but let's see what happens. Let's see how they pull this one off. They'll pull it off if they can keep the price of silver down long enough to accumulate that position, but damn, 800,000 ounces, man, that's like a year's mine supply. What's the odds of them getting that done? Not a lot, in my opinion. Let's take a look at here. Sorry to make you dizzy. The Fed decided to take a hard line and persist with its rate hike and taper mantra, despite the fact that stocks have been hammered since the FOMC meeting on January 5th. Now they run the risk of even lower lows as the market tests the Fed's resolve, except we're not seeing lower lows. We're seeing sideways movement somewhat in those markets. Why? In my opinion, again, plunge protection team. It's the government and the Fed bailing out the stock market on the back end. Why they're talking about raising interest rates. Well, that's what I would do. If I thought I was going to crash the stock market by raising interest rates, and when the market started to crash, I would do my best to buy as much of that marketplace to keep it sustained somewhat so it didn't crash, trying to get the best of both worlds. I'm thinking like a criminal. That's what I would do. But again, in summary, he'll put it this way. Sprott has a hard time believing this latest dump in metals and miners is organic or natural. Oh, from your lips to the silver god and the gold god's ears. All right, that's exactly what's going on. And I wish Sprott would get more involved with industry leaders, talking heads, and maybe Wall Street Silver, and get a cohesive group of people going after legislators, letting them know this happens, a lobbying group, so to speak, but not really a lobbying group. But I wish people like Sprott would do this, all right? And again, they're talking about focus and levels here. Good article on Zero Hedge, banks purge the weak hands again. You can read that for free on ZH. Off to my thoughts here. Now, this is kind of my thoughts. And again, my chart dude out there, if you're watching, don't get upset. It's just questions that I have about charts and chartists, all right? And again, and I got this up here, how charts lie. Now, I'm not trying to dig charts. I think I've learned a lot about them, and I've learned how valuable they are. They show you where you've been, where you might go based on that data and that information. However, as I said, how to lie with statistics, all right? So what if the statistics, what if the data, again, that chartists read is being manipulated purposely to give certain, let's say, give certain readings on charts? So if you wanted to have a head and shoulders formation, how could you manipulate the data to get that on a chart? Charts that millions and millions of investors and millions of money managers and people that understand this market and very smart, intelligent people rely on these charts, okay? But what if those charts are being manipulated purposely? What if a head and shoulders formation was purposely made by manipulated data from entities, large entities? What do you get then? Can you rely on the chart? Does the chart show manipulation? I don't think so. And again, correct me if I'm wrong, please. I'm not acting like an expert in charts, but it started getting me thinking here. I'm trying to think like these evil crooks, right? If I wanted to screw markets overall, every market, gold, silver, stock markets, whatever, how and knowing that a lot of people use charts to make their predictions of what they want to do, and charts are probably used by algorithms and stuff to make trades. How do I manipulate the charts? Well, the first thing you do is you manipulate the data. And how hard is that to do? Well, folks, we know it ain't hard to do. So this makes me question, is the market following chartists? Is the market following charts? Is the market following data that could very well be manipulated and skewed to force people to trade one way or another? I believe it is, all right? That being the case, you read articles like this in Seeking Alpha, revisiting the gold short. And let me look at some of the key points here. Hawkish Fed, higher expected real U.S. Now, this is a summary that this young gentleman here, and I don't know how old he is, but he believes that hawkish Fed is going to make a difference by higher U.S. Treasury yields. Now, the problem with that whole thing is assuming that this tells me that people that write these kind of articles right now, and let me see, and they're due to break-even inflation expectations. This leads me to believe that these people right here believe that the Fed can hike it up a couple percent and we would be into real yields, and that would be a reason to get out of gold. Completely false, in my opinion, completely false. This is why it's hard to read stuff like this. Although gold has caught a safe haven bid for now, it's not a safe haven asset in this environment due to break-even inflation expectations. So this gentleman really thinks that they're going to, this year, we're going to have break-even rates, real rates even possibly. He's talking about break-even rates. That's assuming that he believes the data he is giving. Here's a great example of this. This gentleman is given data, official data. He believes it, so he makes assumptions like this. But we all know that the CPI, if it was based on how they did it in the 80s and the 70s, the CPI would really be around 15% right now. I'm kind of quoting Peter Schiff on that, but I believe he did his homework. Let's take a look at another writer out here. I think she writes about gold as well. And there we go. A review of the gold mining industry, including considerable. 2022 has decent odds of being a year that is good for gold relative to other assets similar to 2019. 2 gold stocks I'm buying, looking for helping. So give me 1 second here and see. I think Lynn Alden actually has a better, in addition to diverse, because the environments they become. Anyways, I saw something in here I wanted to bring up, but forgive me, I can't now because I forgot what it was. But for the most part, if you're looking at the summary of Lynn Alden here, she's mostly into stocks and trading and stuff like that. We're buy and hold physical people, so we're in a totally different world than they are. But doesn't talk much about here that I can see having real rates really having an effect on gold, because I think Lynn Alden probably understands that real rates aren't real rates. Let's move along from here and go to gata.org. Good article out here. Where is it? Why central banks' digital currency may never happen. I found that comforting, actually, because I really believe that the rollout of cryptos was just to get young people familiar with digital currencies so that the governments worldwide and central bankers worldwide could take over the world. That's my conspiracy, but a good article, and I'm glad that we may never see central bank digital currencies. I'm hoping we don't see any government digital currencies as well. China's gold consumption jumps by 1/3. That's good news for gold people, and in fact, that's probably why gold is going to continue to climb, and they keep trying to knock it back a little bit because it's going to pull silver up with it, and BofA will go bankrupt. Boy, how's that for a laid out for you right there? Again, my opinion, and the opinion of people way smarter than me. Let's see what else we got here. Good article here by Pam and Russ Martins, and I'm going to kind of see if I can find that right here. Government study shows that Wall Street megabanks have dramatically shifted the derivative exposure to corporations. And why I brought this article up is because, again, think about that $800 million derivative that BofA owns, which currently it looks like they're actually might making money if their average is 223, but I doubt it. They're at a break-even point right now. Silver jumps up to $25, $30 an ounce. BofA is screwed. Who screwed them, in my opinion? JPM. Well, let's read this. The last thing a volatile stock market needs right now is more surprises from the dark corners of Wall Street. Unfortunately, we can guarantee you that more surprises are coming the way of uncleared derivatives blowing up in the balance sheets of publicly trading corporations. How do we know this? The information on the chart comes from a study quietly released by the Office of Financial Research. That's the federal agency that provides research to bank regulators. Let's kind of move down here. And well, anyways, I'm not gonna give you homework because no one likes homework, but suggested readings. It's a really good article. It kind of goes into what we're talking about, and in fact, this article makes the BofA $800 million short. My understanding is that Ted Butler said that the excuse of BofA and the excuse of regulators when they address this BofA thing is that, well, it's only $800 million, all right? BofA has way more derivative positions than that, and that is true. However, BofA doesn't have way more derivative positions that are as volatile as silver can be, and the other positions may not have J.P. Morgan behind them looking to screw them as well. My opinion. So, but it looks like we didn't learn anything from 2008, folks. So the derivative positions by big corporations out there is just insane as it's ever been. So I don't see how they're going to slowly let the air out of this greatest bubble of all time. But they're trying. Listen, if you get tired of looking at this monkey hammering on silver markets, you got to let them know that you're watching them. You got to let them know that you're aware this is happening and a growing awareness. And how do you do that? You call them up to complain about it. Call CME Group, complain about again, be polite, don't be rude, understand what it is you're talking about, all right? Ask them about the 800 million ounce silver derivative position by BofA. Just ask them that right now. This could blow the lid off some of the silver manipulation and make them look at these markets a little closer in the COMEX markets. But that you wouldn't ask, hold on, who would you ask? I'm not sure if you would ask CME Group, because that was not done through the CME Group, but I think CFTC would be the people to ask on that. Call COMEX, ask them why they allow this is what you would complain about COMEX, about these consistent large commercial short positions. Just bring it up, and if you're unsure what to say, just read a little bit about it. Listen, Ted Butler has a couple articles, and just simply tell them that why do you allow these 4 to 8 big commercial bank positions to constantly short the silver prices while never taking a long position. Ted, again, if you're unsure what to say, make some crib notes for yourself, be polite, and do it the right way. As far as that BofA short position, I think you could call the CFTC, but maybe it's the SEC you want to call. But no less, start making calls, folks, man. Keep those phone lines busy. Let them know that we're watching them and that the movement is growing to eliminate this kind of manipulated behaviors in the precious metal markets. Well, I think that's it. We're going to get into questions yesterday. On yesterday's video, I'm going to answer a few questions of yours out there. And I'm on Wall Street Silver, great forum. I post my videos out there, so you can catch me there under Because. Brian Kuzmar, Gold and Silver Pro. And I'm also on GTTR now. Getter, I think that's a GETTR. Getter now. I notice it's a lot of videos out there, but I'm just thinking, to kind of open up to a couple more platforms, and I keep threatening to open a Twitter account. So I got mixed emotions, but I may do that as well and give you guys a bunch of different options to contact me, besides through my website and my store. Well, let's take a look at the questions from yesterday. Not too many. John Gordon, no, I can't loan you an Australian cuckoo. I'm just kidding. Did you say, yeah, I said there, he's a surfer. All right, John, that's pretty cool. I'm a surfer, mostly wave skiing a lot, but goat boaters, as they would call us in UK and Australia, but I've been surfing for quite some time. Mark Richards, Tom Carroll, Kelly Slater. Kelly Slater actually grew up just a little bit north of here. Thanks for watching, John. I appreciate that. Been hibernating in my shed. It's pretty cool. Here, you got to pause this and read this, but thanks for commenting, Ornis. I really appreciate that. I'm not quite sure what the point was there, but it almost sounds like something I would have done. So Russell King did well back in the day. Russell remembers in his retirement account he put $100 at 10%. That's when CDs were paying 10%. I forget what treasuries are paying, but and another at 12%. That was a time when there may have been positive returns, but inflation was quite high too. Maybe they were lying to us about the CPI back then, so who knows. But no less, yeah, the returns were much greater. I don't think we're going to see 10%, that's for sure, unless the Fed was willing to do the right thing. But it would cause a lot of pain out there. But, sometimes you got to get the pain over with quickly rather than drawing out over a long period of time. Who wants to get involved with a manipulated market? We do, if you know how it's manipulated, whether it's cryptos, gold and silver, or equities. If you know how the market's manipulated, you know who the players that are manipulated are, and you know what the end game is, yeah, you can be a winner at that table as well. And bought more, good to hear. Tube Supio, thank you. Ryan McNeil as well. And William, good to see you. Love fishing too. Miami boy, no stackers that are close to being homeless. Only sellers can make a buck thanks to outrageous premiums. That's not true, Miami boy. I'm sorry you feel like that, but if you get a chance and you are in Miami, give me a call or come by. I'll give you the heads up and let you know that you can make money if you're buying from the right players and how to do it. Thanks for watching, Miami boy. I appreciate it. And boy, you guys are getting the weather down there as well tomorrow. Corey Smith, I agree. Let it burn and rebuild it. Absolutely, sir. Yep, that was Volcker in the 70s that raised Fed interest rates to 15%, effectively mortgage rates to 20% on a Saturday. The man had balls. The man knew that it was going to take some pain, but the amount of pain today is going to be so much greater, but it has to be done. You got to rip that Band-Aid off sometimes, I think, Welchco. Anyway, thanks for watching and commenting. When margin calls come, some people will liquidate their gold and silver. I don't think this is the case, Sean, on this one. I think, again, it's just simple manipulation. Thanks for watching and commenting. And you as well, Manavision, Baquez. So over the price for 35. Silver Eagles are too much, in my opinion. Again, even if they're spot plus $6, it's too much. And the fact is, they're probably like spot plus 7 to 10. I got them here. I'll beat ATMEX, SD, and JM Bullion on their prices, but they're overpriced in my opinion still. Thanks for watching, Vasquez. There's some better deals out there for sure. Buy the dip, sir. Thanks, Dobie Dab. I appreciate that. I agree with you. Lou and all you guys. G, thank you as well. And Chris Dutcher, let's see, to get food. Luckily, we bought a small Nissan and we had cash. Okay. Hey, listen, it's about you spend the first 40 years of life making money, and you spend the second 40 years of your life trying to keep it. So being frugal is a good thing, sir. Chris, I appreciate your comment there. And all you folks here, Rick, yep, they will. I believe this is true. They're going to lose every hammer tool in their box not to fail. But they are beholden to JPM, the most evil banker of all, in my opinion. Thanks for watching and commenting. And, yep, I agree with you, Greg. And give me 1 second here. I hope Neil Young will remember Spotify. Don't need him around. Anyhow, it's a pretty good one. I thought about that as well. Goldbusters, hey, guys. Hey, thanks for commenting, all of you right there. And, man, I'm glad there wasn't that many comments. I think as this channel grows, I'm going to have a hard time doing comments. Well, that's the end of this video for today. I hope you all have a great weekend. And as you know, my theme for the year is think for yourself and question authority. That includes question yourself. Question the narrative in your mind. Question the narrative that you believe. Is it your own narrative that you created, or was it someone else's? If it was someone else's, always question it. Hey, that's it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. If you live in South Florida and you want to buy gold and silver, precious rare coins, precious metals, whatever, come and see me. I'm open 10 to 4 Mondays through Fridays. A brick and mortar only, so we can't do business on the phone. But if you got questions, call me. If you don't live in my area and you got questions, please put it in comments and I'll take a look and see if I can answer it. And also you can catch me on Getter, maybe Twitter soon, and some other forums as well. Hey, thanks for watching. Have yourself a wonderful weekend, and I'll talk to you soon.